China has stepped up its economic war against Japan, intensifying the tensions between Asia's two biggest economies. The latest row was triggered by Japan's new Prime Minister, who recently warned that any Chinese military move against Taiwan could constitute an existential crisis for Japan and justifying a potential military response. China, which claims Taiwan as its own territory, responded with fury. Its warning. In fact, Beijing says Tokyo could face a severe blow, called it aggression against national reunification. That's what it calls it. Beijing also advised Chinese citizens to avoid traveling to Japan. It will deal a blow to Japan's tourism industry, to say the least. China took aim at Japan's seafood exports, sending strong signals that Tokyo is on the defensive in this economic standoff.
Let me stress that Japanese Prime Minister Sanae Takaichi's erroneous remarks concerning China have aroused strong public outrage among the Chinese people. Japan cannot expect to damage Chinese sentiment while seeking benefits at the same time. This is not the right way to deal with China. We urge Japan to immediately correct its wrongdoings.
China has said that a trilateral meeting of the culture ministers with Japan and South Korea, which was scheduled for this month, is tough, given the escalating diplomatic dispute with Tokyo over Taiwan.
The Japanese leader's blatant and extremely wrong remarks on Taiwan have hurt the feelings of the Chinese people, challenged the post-war international order, and undermined the foundation and atmosphere for trilateral cooperation among China, Japan, and South Korea, making it impossible to hold relevant China-Japan-South Korea meetings.
The economic tensions come as Japan remains the most important U.S. ally in Asia. It hosts about 54,000 American troops and provides a strategic base for U.S. military operations in the region. The dispute has also sparked anti-Prime Minister protests in South Korea. Civil groups, which include Justice Memory Solidarity and the Progressive Party of the Republic of Korea, held a rally outside the Japanese embassy in Seoul. They condemned Takaichi's remarks and also warned that they threaten peace across the region.
Japanese Prime Minister Takaichi's recent statements have intensified tensions in the surrounding area. I think to claim that another nation's territory directly affects one's own national security reflects an imperialistic mindset.
With Takaichi's assumption of office as the Japanese Prime Minister, we hope that the Lee Jae-myung administration will not only focus on future ROK-Japan cooperation, but also address historical issues and play a significant role in resolving them.
Takaichi's November 7 remarks claimed that a Taiwan contingency could be a survival-threatening situation for Japan, and it continues to draw strong outcry in China and now has sparked regional protests. With China stepping up to target tourism and seafood exports, Japan seems to be on the back foot and will continue to hurt if the standoff escalates further. Morgan Stanley has made one of its boldest calls on Indian stocks. The brokerage firm saying the Sensex could touch 107,000 by December 2026. Technical analysts are also predicting a move towards 90,000 by the end of this year. And this comes as Sensex is already close to its record high. What's driving this confidence is the immediate question. So here's the big picture. In its latest report, Morgan Stanley is saying India's market still has a long runway. The firm believes the underperformance in 2025 is temporary. It expects strong domestic demand, healthier corporate balance sheets, and steadier global conditions to support the next market cycle. Strategists at Morgan Stanley are seeing a 30% chance of the Sensex reaching 107,000 points by December 2026. A 30% chance. In fact, the base case has the highest probability. It expects the index to rise towards 95,000 by the end of 2026. The outlook is built on better macro stability, a pickup in private capex, and an expected rebound in global trade. The firm also sees progress on India and US tariff issues, which could reduce volatility and also lift the market sentiment. The short-term question is, will Sensex cross 90,000 by the end of this year? The index is already close to its all-time high and it has rallied sharply this quarter. It is trading well above the key support areas, which also keeps momentum strong. Meanwhile, reports by technical analysts placing the next target near 91,500 by December 2025. The trend showing a steady upward move with support forming around the 82,000 to 84,000 range. Resistance levels are between the mid 86,000 range and the upper 89,000 range. The market will need to clear these levels for the next leg higher. And just to understand the bigger picture here, we're looking at the last 5 years. Let's get to those numbers. The Sensex has risen from around 47,000 points in 2020, as you can see, to over 85,000 in 2025. And that rally showing that domestic inflows have remained strong. Global funds have increased their exposure. India has shown consistent resilience through global uncertainty. And the 5-year trend also showing a market that grows with the economy and also handles global shocks better as compared to many other markets. Meanwhile, Pakistan is engulfed in total corruption. We are not the ones saying that. The true nature of Pakistani economy has been exposed by the International Monetary Fund, the IMF. In a blistering assessment, the IMF says corruption in Pakistan is persistent and corrosive. And it exists at every level of the government. According to the global lender, Pakistan recovered 5.3 trillion worth of corruption-linked assets in just 2 years. And even that, the IMF says, is only a fraction of the actual damage that corruption is causing to the country's economy. You heard that right. After delaying it for nearly 3 months, Pakistan's finance ministry has finally released the IMF's governance and corruption diagnostics report. They had to because it was a condition for the IMF board to meet and approve the next 2 loan batches worth $1.2 billion. The 5.3 trillion rupees figure covering recoveries from January 2023 to December 2024. But the IMF is clear here. There is no reliable way to actually measure the full scale of corruption in Pakistan. And the recovery numbers only give a glimpse of the actual cost. Simply put, Pakistan's economy is bleeding, not just from mismanagement or external shocks, but from a corrosive system of corruption that has become so embedded in the country's political and economic fabric. The big picture is far worse here. The IMF says Pakistan is losing up to 6.5% of its GDP every year to this corruption, elite capture, and a justice system that cannot or will not hold the powerful accountable. Assets recovered by Pakistan's apex anti-corruption agency, the IMF says, are just one small indicator of how deep corruption actually runs. The IMF projecting that Pakistan could increase its GDP by 5 to 6.5% in just 5 years if it simply pushed through basic governance reforms. But will Islamabad listen is the immediate question, because history says otherwise. Just to put that into perspective, Pakistan has gone to the IMF 24 times since 1958, making it one of the IMF's most frequent borrowers. Be it Pakistan's military, the military governments or civilian governments, almost every administration has ended up at the IMF's door. And the current program under Prime Minister Shehbaz Sharif is Pakistan's 25th. Now just consider this. Right after independence, Muhammad Ali Jinnah warned in 1947 that corruption was a poison that must be eradicated. 70 years later, the IMF says that the same poison is still weakening Pakistan, draining public funds, distorting markets, eroding trust, and driving investors away. The IMF's report pulls no punches. It criticizes successive governments and military rulers for enabling elite capture. One example it cites is the PTI government's 2019 decision to allow sugar exports, a policy that benefited powerful lobbies at the expense of the public. The report noting how ordinary Pakistanis have to routinely pay officials just to access basic services. And at the top, policies are shaped by economic and political elites using public authority to enrich themselves. The IMF fielded 2 missions to Pakistan to study corruption and governance, and their findings on the justice system are damning. They warn that judicial independence is compromised, and recent changes to the appointment process for Supreme Court judges raise serious concerns about political influence and the rule of law. The IMF highlights critical risk areas: opaque public procurement, weak budget controls, mismanaged state-owned companies, a compromised judiciary, sluggish, outdated institutions that allow corruption to flourish. The IMF has now laid out a 15-point reform plan. It demands transparency, merit-based appointments, and tighter financial controls. But then Pakistan has already fallen behind. The government failed to publish a required action plan, and key agency appointments were delayed. This is not just a moral argument, of course. The IMF says corruption is a macroeconomic threat. It is discouraging investment, it's undermining public trust, and it's also stopping the country from achieving long-term growth. But then if Pakistan wants to actually escape that cycle of endless bailouts, according to the IMF, it must confront corruption head-on, not just target a few individuals, but actually rebuild its institutions from the ground up. Only then can Pakistan actually break the pattern that it has been seeing for decades. As the country enters yet another IMF program, the IMF's warning is clear: unless Pakistan confronts the real networks profiting from the misery of the ordinary people, no bailout, no reform package, and no political reset will actually deliver real change. Tibetans in exile welcomed the Grammy nomination earned by their spiritual leader, the Dalai Lama. Earned his first Grammy nomination. He received the global recognition for his spoken word album called Meditations, the Reflections of His Holiness the Dalai Lama. The album is a collaboration between the Dalai Lama, celebrated Indian musician Amjad Ali Khan, and his 2 sons. Take a look.
I would say that this would certainly ensure a new set of audiences, especially in music and art, to recognize his words, the wisdom that he's been sharing, and the human values of love, compassion, and oneness that he's been propagating and trying to spread across the world.
Our next story is from the United States, where Republicans are pushing back against President Trump's plan to send $2,000 checks to working-class households next year. The White House says these payments, what Trump calls a dividend, would be funded by tariff revenue. But many Republican lawmakers say they want that money to help reduce the U.S. deficit, not to fund the cash payouts. And this dispute has become one of the clearest signs of the growing divide between Trump and the GOP-controlled Congress, it seems, and a sign that his hold on Washington may be weakening. But Trump is pressing ahead. At a U.S.-Saudi investment forum in Washington, he said, and I'm quoting, "We are going to be doing a dividend for low and middle income people of at least $2,000, quote unquote." The House Budget Committee chairman has said he told the Treasury Secretary that he wants tariff revenue to go towards deficit reduction. He also warned that direct checks could fuel inflation. In the Senate, the majority leader has also called for using tariff money to cut the deficit. Various senators, Rand Paul, Ron Johnson, are also firmly against the payouts, while others, including Shelley Moore, have raised concerns as well. The federal budget data showing the US debt is still rising. The government recorded a $1.78 trillion deficit in the fiscal year through September, barely lower than the previous year. And while the White House admits it will likely need congressional approval to move ahead, officials are also looking at options to circumvent the Congress and send the checks anyway. A step that would raise serious questions about presidential powers and the role of the legislature. As for the timing, it is interesting to note that the plan is coming ahead of the midterm elections next year, and we know that Trump is facing pressure from his own voter base. With his popularity dipping in recent opinion polls, we've been telling you about this, Americans have blamed the Trump administration mainly on two issues: the rising cost of living and the state of the American economy. And as a result, in recent days, what we have seen is Trump is trying to walk back on some of the duties on food that cannot be produced in America, like coffee, bananas. Remember, originally Trump had said that there would be no exemptions for his sweeping tariffs. Meanwhile, the Democrats have also criticized the plan. California Democrat, meanwhile, has said Americans will be more worried about the higher prices the tariffs are causing than about getting a rebate check. Also, analysis by the non-partisan Committee for a Responsible Federal Budget showing Trump's dividend program would cost around $600 billion. That's already far more than the current tariff revenue. Tariffs have brought in about $195 billion reportedly this year and are expected to raise about $300 billion annually if unchanged. And then there is that big unknown over the US Supreme Court also reviewing Trump's use of emergency powers to impose these tariffs, and if the court strikes them down. The CRFP says it could take 7 years just to fund the first round of payments. To stay up to speed with the latest news, download the WION app and subscribe to our YouTube channel.